Guys, this is S&P 500 weekly technical analysis for the week of April 7th. Now S&P 500 has lost 17.50%, Dow Jones has lost 15%, and Nasdaq has lost close to 23%. So what does all of this indicates? This indicates that the US and the global stock markets have started the recession cycle. Now, in the US stock market, it will be the Nasdaq that is expected to lose up to 60% to 65% during this recession cycle. And S&P 500 is expected to lose somewhere around 55%. And Dow Jones is also expected to lose somewhere around 50%. Now, this is not going to happen immediately. It will take time. For this, you need to understand the movement of the market and how the stock market works. For now, we have seen this was the first leg, first bearish leg, then it retraced, then this is the second bearish leg. In my previous S&P 500 weekly technical analysis, I have mentioned that the second bearish leg has already begun and we will see more and more fall. So this is the second bearish leg. Then there will be some bullish retrace, and then there will be the third bearish leg, and then bullish retrace and the fourth bearish leg. In this manner, in this staircase pattern, the market will come down. So what does this mean? This means that every bullish retrace will give you an opportunity. It will give you an opportunity to go bearish, to short at these the lower highs. And one more thing, guys, recession is not the time to be fearful. Recession is the time to make a lot of money. Now, the most important part of this fall is not in the indices. It is not in the S&P 500 or Dow Jones or Nasdaq. It is the crude oil. The crude oil has lost more than 10% within 2 days, around 13% or so within 2 days. Crude oil is very important because whenever there comes heavy fall in the crude oil, then it confirms the recession cycle in the economies, because a decline in the crude oil indicates decline in the demand. Now, if you are thinking that the situation will improve in the next few weeks, then no, not. The situation is expected to worsen in the coming weeks. And because of these two very heavy candles, the S&P 500 has lost 9% and closed in this particular manner. This indicates that on Monday, either there will be a gap down open, or irrespective of any open, there will be an initial or intraday bearish movement. The only condition that can help the S&P 500 and the market is the open equal to low condition. Now, one more thing. Until last week, it was only the Nasdaq that has given a confirmed bearish crossover in the moving averages on the weekly charts. So last week, it was confirmed that the Nasdaq has entered into the recession. But now, because of this movement, the S&P 500 and Dow Jones have also given a confirmed bearish crossover in the moving averages on the weekly chart. Now, one more important thing, the S&P 500 has failed to sustain at 5119. What is this 5119? This was the low the S&P 500 made in September or August 2024. This was the low. Now S&P 500 has closed below this low 5119. What does this indicate? This indicates bearishness or more pressure or more fall. Now, one more important thing, 5133. S&P 500 has failed to close above 5133. What is 5133? 5133 is the 38.2% of the fib retracement level. What does this indicate? This indicates more pressure, more fall. But irrespective of anything, any pressure or any fall, eventually there will be a bullish retrace to 5133, which is the 38.2% of the fib retracement level. This may or may not happen on Monday. It might take some time, but it will happen. So now I will discuss all of this movement, precise movement, where it will be heading to, what will happen during this bearish breakout that was already there in the last week on Friday 28th of March. and what will be the condition when it can actually reverse, when it can actually recover, and to what levels it can recover, and then the third bearish leg. So I'm going to discuss each and everything in detail in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. On the weekly chart, so far there is no saturation, no oversold, nothing. Okay, the only change is in the moving averages. That moving averages are now bearish, and now on the weekly chart, S&P 500 is close to 90% bearish. And exactly the similar situation is seen in the Dow Jones and the Nasdaq. However, Nasdaq is more bearish. Nasdaq is like absolute 100% bearish. And yes, on the weekly chart here, I will share with you this the concept wherein what happens is that during the correction cycle or the recession cycle, whenever the market comes down and there comes the crossover in the moving averages, then after some time, after a few weeks or so, then there comes a bullish retrace. This bullish retrace is so heavy that it moves up and looks like that the market has already recovered. But this bullish retrace is to fulfill the technical obligation to the moving averages. So I will tell you this concept in the weekly chart section, and this will help you avoid falling into that trap. Now the second point of the agenda is the S&P 500 technical analysis on the daily chart. On the daily chart, you are seeing the situation. Okay, situation is pretty bad. Now on the daily chart, there is a significant thing. It is the divergence. The divergence is very heavy, extremely heavy on the daily chart, and this divergence is through the indicator. Okay. However, the other indicators, stochastic RSI or the other technical indicators, have not yet confirmed any saturation or the oversold. This is why even though the divergence is heavy, the market is not in a condition to get a good bullish retrace. There may come a small red candle on a small green candle on Monday, but that will not be a confirmation of the bullish retrace. Okay, for the bullish retrace to happen, two or more than two technical indicators must align in that side so that there can come this kind of bullish retrace. Third and the last point of the agenda is the probable movement of the SP500 from April 7th, which is Monday, through April 11th, that will be Friday. Now, what is going to happen in the S&P 500 in the entire week from Monday through Friday, I am going to share in the last point of the agenda. But guys, let me remind you once again that all of these three sections are interrelated, are interconnected. So when I say the probable movement, and by the time I come to discuss the probable movement, I have already discussed the probable movement 30% to 40% probable movement in the first and the second point of the agenda. This is why it is recommended that you should watch all of these two sections in order to understand what is going to happen in the next week, why that will happen, and how that is going to happen. Now guys, before I discuss the first point of the agenda, let me give you a quick recap of what was anticipated to happen in the previous week and what was actually seen, or how accurate were my predictions. Now on Monday, what we have seen that the low was 5488 and the high was 5627. So this 5488 is my calculated support level. So in my midday update on March 31st to my Patreon community members, I mentioned that, and when it gained the 5500 psychological mark, then it opened the bullish side to 555x. It was inevitable. But once it recovers at 555x, then 558x will be there, and then eventually it will be 5600, wherein there is a calculated level in 561x. Then that will come into the picture after 558x. So on Tuesday, the low was 5558 and the high was 5650. So because on Tuesday the S&P 500 sustained at my calculated heavy support, that was 555x, moved up and then recovered 558x. So it was very much clear that now it is heading to the 561x, and then eventually it will be moving to 564x to fulfill its technical obligation. And this was my midday update to my Patreon community members on Tuesday, that because there is no hourly closing seen above 564x, this is why it will be seen or considered as rejection from the 564x. Now on Wednesday, the S&P 500, the low was 5571 and the high was 5695. Now on Wednesday, I have given this important update to my Patreon community members, and I have mentioned the trap. Now this was that important update on April 2nd, 2025. Okay, potential trap. Why that trap? The trap was because of 5669. This is my calculated level. Then on Thursday, on April 3rd, there was a heavy gap down open and it failed to move up. And the most important part was the S&P 500 never crossed the 5,500 psychological mark. On Thursday, the high was 5499 and it came down to 5390. Now there was a heavy support level in 539x. This means that any fall, any kind of fall will be limited to the 539x, and that's it. That will be the maximum fall. So now you can see here that on Wednesday the low was 5390 and it closed at 5396. Now comes the most important day, that was yesterday, Friday. Friday, you can see a very heavy bearish candle. It was in the open equal to high condition, a heavy gap down open. It opened at 5292. Okay, and the open price was the high, and then it came down and it closed at 5074, whereas the low was 5070. So now this was my pre-market update to my Patreon community members yesterday on Friday. And here I mentioned 519x. 519x in a manner that after open, when it comes down, then it will be handled at 519x, and then there will be an intraday bullish reversal. However, if the market remains under pressure and fails to clear the 526x, this was the tiebreaker. If it remains below 526x, then 5192 will be breached. And then in the comments I mentioned that once it trades below 519x, then what will happen? Then 5133 will be seen. And just below 5133 is my calculated support level. What is that level? 5120. Yes, yesterday it was heavily volatile, okay, and the situation was changing every hour or every 30 minutes. However, through these daily precise updates of the S&P 500 and the Dow Jones, which I give to my Patreon community members every day from Monday through Friday, I was keeping my Patreon community members informed about the movement. Where will be the fall? From what level it can retrace? What will keep it bearish? If it fails to recover, then it will come down by 2% or 3% or so. So guys, if you also want to get these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, also remember, these daily updates will help you navigate safely through the recession cycle. You will feel more confident. Now guys, I am going to discuss the first point of the agenda, and this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Okay, now let's first analyze the candle. But guys, before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far if you have liked this video, then hit like. Now this, the last weekly candle, it's a heavy bearish candle, very heavy bearish candle. Okay, the closing of the candle is almost equal to the low of the candle. This further confirms that the bearishness was very heavy. So because of all of this, now it is confirmed that there is very heavy bearishness in the market. Okay. This also indicates a gap down open, on Monday, or irrespective of any open, an initial or intraday bearish movement on Monday. Now let's confirm the same through the Dow Jones. Dow Jones almost the same, the similar condition. The closing is approximately equal to the low of the day. Very heavy bearish candle, very heavy bearish sentiments. A gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Before I discuss the technical indicators, let me share one rule of the stock market. Okay, this is the rule. And I have already disclosed this rule, or I have already discussed this rule in the mid-week update that I have published on this on last Wednesday to my Patreon community members. Now this rule says that during the bearish cycle, okay, once there comes a confirmed bearish crossover in the moving averages, then after some time it may take a few weeks, but the market will eventually recover. Recover to what? It will be recovering to the moving averages. Okay. Now when it recovers to the moving averages, then at that time it will be heavily bullish. Okay, but this will not be the bullish movement, this will be the bullish retrace only. And during this bullish retrace, the market will test the moving averages and then it will fail. It will test, and what will happen then it will fail. Okay, so this will be a very good opportunity, okay, like once in a lifetime opportunity to enter bearish, because then eventually there will be a heavy fall, more than 10 or 15% fall. Now let me show you how it works. Now this was February 2022. Okay, and for more than 1 year we have seen the bullish movement, okay, bullish trend. Then in February 2022 we have seen a confirmed crossover in the moving averages. Okay, market started to trade bearish, and then in 1 week, that was 14th of March 2022, there was very heavy bullish movement, and the market, the S&P 500, tested the moving averages. Then for next 2 weeks it was seen bullish, and at that time there was a feeling as if everything is good, normal, this was the low, and now it is going bullish and bullish and bullish. Okay, but what happened, that then in the next week it came down, one or two red candles, and then there was a bearish slip. Okay, this is what is seen, that when it tests the moving averages, then at that time there comes a feeling, or everyone talks about the bullish movement or the bullish retrace. However, that is not the time to go bullish, that is a time to go bearish, because if you notice, there was a confirmed bearish slip. Okay, and because of this bearish slip, whatever bullishness was seen, it was gone. And then what we have seen after that, the bearish slip, we have seen heavy fall, a very heavy fall in the S&P 500. And during this heavy fall, the S&P 500 from this top has lost 20%, 21%. And then once again, when it came down, it tested the moving average. When it came down, it again tested the moving average, and then again the fall. So here what I'm trying to say is that now the S&P 500 is coming into a condition, not just S&P 500, but the entire US stock market, all of the indices, that now the indices are expected to get a bullish retrace. Now why this bullish retrace will happen? Because next Friday, from April 11th, 2025, the earning season will start. It will begin, okay, because the banks are going to post the earnings. Now generally the earning season is seen as bullish. So in this, the earning season, if all goes well, then we will see a bullish retrace. This earning season will last for 2 to 3 weeks. That is why I am saying, and one more thing, now the S&P 500 is coming down to the boundary of the Ichimoku cloud. Okay, this is the technical reason. Earning season is a non-technical reason. This is the technical reason. Okay, and then there is a very heavy support level, very heavy support zone. Actually, there is a very heavy support zone. This zone is in the 9xx, then one zone is in the 48xx, that is already there. Okay, this means that now the S&P 500 is coming to the point, okay, the from where there will be a fall, but this fall is expected to be limited, okay, to the Ichimoku cloud itself, okay, and then to my support zones which are below the Ichimoku cloud, and then the earnings season will start, and then everything is expected to change. Now, one more thing, on the daily chart, if there comes two red candles, then it will hit the saturation, absolute saturation, okay. It is also expected to hit the oversold levels. So once the saturation is there, oversold is there, divergence is there, then technically also the S&P 500 will come under this technical compulsion to get a bullish retrace. Now, once again, this bullish retrace will be limited to what? This bullish retrace that will happen, it will be limited to the moving averages. Now, moving averages so far around in the 57xx, and the S&P 500 is in 50xx. This means that this bullish retrace might take 2 weeks or 3 weeks. Okay, and then in next 2 or 3 weeks, the moving averages will be coming in the 54xx or 53xx. Okay, then the bullish retrace will meet the moving averages in 54xx or 53xx, because you need to understand that there is a gap. Okay, on day before yesterday, on Thursday, S&P 500, the closing was 5396. Okay, low was 5395. Now from 5395 there is a gap. Then so it makes perfect sense that when it completes this the bearish cycle, then it will be reversing, then there will be a reversal. This reversal will be to 539x, okay, and that will be the maximum as of now. Now I hope it is clear that why there will be a bullish reversal, what will trigger this bullish reversal, okay, what are the factors that will trigger. And once again guys, when this bullish reversal happens, then you will see the news and you will read articles everywhere. It will be mentioned that now the bearishness is over, it is going bullish, bullish, bullish. Now I've shown you the movement in February 2022. Okay, almost exactly the same kind of situation was there. Then what has happened? 20% fall. Okay, so this bullish reversal, bullish retrace will be seen as an opportunity. Opportunity for what? Opportunity to trade bearish, not to go bullish. Now let's analyze the technical indicators. Now in terms of the technicals, S&P 500 is bearish through the moving averages, because now there is a confirmed crossover in the moving averages. S&P 500 is bearish through the Bollinger Bands on the weekly chart. S&P 500 is neutral through the Ichimoku cloud. S&P 500 is bearish through the MACD on the weekly chart. S&P 500 is bearish through the stochastic RSI on the weekly chart. So overall the S&P 500 is 90% bearish on the weekly chart. Now comes the Dow Jones, and once again I analyze the Dow Jones just to confirm that whatever we are seeing in the S&P 500 is going to happen and it will not be a trap. Dow Jones is a similar condition. Dow Jones is bearish through the moving averages on the weekly chart. Dow Jones is bearish through the Bollinger Bands on the weekly chart. Dow Jones is neutral through the Ichimoku cloud. Dow Jones is bearish through the MACD on the weekly chart. Dow Jones is bearish through the stochastic RSI on the weekly chart. Overall, the Dow Jones is also 90% bearish. Now, one more thing I forgot to mention here, and this is regarding this heavy divergence in the MACD. Earlier, there was heavy divergence. We have seen heavy bullish movement, heavy bullish reversal. But now this divergence is more heavy as compared to the previous one. So this further confirms that now there will be a bullish retrace. But this good bullish retrace will remain conditional. But guys, whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday. And I give them the probable movement every day. I give the pre-market analysis before the open of the stock market, and I tell them what is expected to happen in the entire day. Then I give the midday update. Midday update is given after 3 hours, and I tell them what is going to happen for the rest of the day or until the closing. Then I give the final update. And it is not just about these daily precise updates. And it's not just about these the daily precise updates which I give to my Patreon community members every day from Monday through Friday, but I also give the stock market opportunities minimum 5 to 10 every week in the premium stocks of the US stock market, top 30-40 companies of the US stock market. And that's not all, because I also give this the midweek update. Midweek update, it is a video technical analysis. So guys, if you also want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will, this is my Patreon page, this is my Patreon profile. And when you scroll down, then you will see these three levels or these three tiers. These two are same. So when you subscribe to either of these two, then you will be getting all midweek update videos which I publish every Wednesday or Thursday. Daily SP500 analysis, updates, movement, levels and zones, stock market opportunities minimum 5 to 10 every week. Now this tier or this level is very important, because whatever you are going to get here, by default you will get here, you will get the all midweek update videos, you will get the daily SP500 analysis, updates, movement, levels, zones and the stock market opportunities. Other than that, I will give you one Zoom meeting. This will be a one-on-one Zoom meeting of 2 to 3 hours, and in this Zoom meeting I will tell you the entry and exit secrets, when to enter for maximum profits. Then I will give you one premium hack. This hack works almost 100% of the time with almost 100% accuracy. Then I will give you one trading or options strategy. This strategy works almost 100% of the times with almost 100% accuracy. Then I will share with you the modified technical indicators. These modified technical indicators are used to predict the movement even before it is seen. Then I will share with you the options premium calculator. Okay, because more than 97% of the people, they do not know how to calculate the premium value and they are trading blindly. So in this manner, this tier or this level is very helpful, very informative, and you are going to get much more than what you can expect or what you can anticipate. And if you want to save more, then you can save 10% if you subscribe to the annual plan, or you will get 1 month free. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates, including the stock market opportunities and the midweek update every Wednesday or Thursday. And they are very well aware of what is happening, what is going to happen, what will happen next. So guys, if you also want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market, and if you also want to trade carefully, and you want to know the things even before it happens, and you want to avoid falling into the traps, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. And here I will do the technical analysis of the S&P 500 on the daily chart. So now let's first discuss the candle. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And so far, if you have liked this video, then hit like. Now guys, let's first discuss the candle. It's a very heavy bearish candle in a manner that the open and the closing of the candle looks like an absolute closings. Okay, means the S&P 500 was in open equal to high condition, and also the closing price is approximately equal to the low. Clearly indicates bearishness, heavy bearishness, in a manner that on Monday we can expect a gap down open, or irrespective of any open, an initial or intraday bearish movement will be there. Okay, this is through the candle. Now let's verify the same through the Dow Jones. Dow Jones, this is the last candle, exactly the same thing. Okay, open equal to high condition and closing price is approximately equal to the low. On Monday, there will be a gap down open, or irrespective of any open, there will be an initial or intraday bearish movement. Now let's analyze the technicals. In terms of the technicals, moving average is clear fan out, bearish. S&P 500 is bearish on the daily charts through the moving averages. S&P 500 is bearish on the daily chart through the Bollinger Bands. S&P 500 is bearish through the Ichimoku cloud on the daily chart. S&P 500 is bearish through the MACD on the daily chart. S&P 500 is bearish through the stochastic RSI on the daily chart. In this manner, the S&P 500 is 100% absolute bearish on the daily chart. Dow Jones. Dow Jones, yes, almost the same thing, clear fan out in the moving averages. So Dow Jones is bearish through the moving averages on the daily chart. Dow Jones is bearish through the Ichimoku cloud on the daily chart. Dow Jones is bearish through the Bollinger Bands on the daily chart. And yes, Dow Jones is bearish through the MACD on the daily chart. Dow Jones is bearish through the stochastic RSI on the daily chart. Okay. So Dow Jones is also 100% absolute bearish. So what does this mean, that 100% absolute bearish or 90% bearish on the weekly chart? All of this indicates that the trend is bearish. Okay, market is trading bearish. But this does not mean that every day, every week there will be red candles. This means that every bullish retrace will be seen as an opportunity to go bearish. Okay, so this is how it works. Now, one more thing I want to show you here. Now, it is the divergence. Okay, if you notice this divergence is very heavy. So divergence become heavy on Thursday itself, but yesterday, because of this heavy fall, divergence has become heavier. Okay, and this is happening, or this has happened in all of the indices, not just one, but in all of the indices. What does this indicate? This indicates that continuation of the fall, continuation of the bearish movement for now will create more problem to the S&P 500. But because of this heavy bearish sentiments, okay, fall is allowed. Fall is allowed. Why the fall is allowed when the same fall is going to create a problem? Because the stochastic RSI, which indicates the saturation, okay, and the oversold indicator, okay, has not yet hit their levels, the saturation levels, wherein we can say that the market is heavily saturated, okay, or has hit the saturation levels. This means that on Monday, if there comes a red candle, okay, red candle, then there are chances that the stochastic RSI may hit the saturation. Okay, but still I cannot confirm. But yes, if there comes two back-to-back red candles on Monday and Tuesday, okay, then yes, on Tuesday we can expect the stochastic RSI to hit the absolute saturation, and also the S&P 500 will hit the oversold levels. Okay, then that will be a perfect scenario for a good bullish retrace for next 2 to 3 weeks. And see, this will happen in all of the indices. This is not restricted to just one index. This will happen in all of the indices. And one more thing, okay, again, it's the same, that when this the bullish retrace happens, okay, then in the S&P 500, this was the closing price, or the low was 5390. 5390. Okay, there is also my calculated level in 539x. That is why I was very much confident that it will not lose the 539x on 3rd of April, that was Thursday. That will be the maximum fall. Okay, so whenever this bullish retrace happens, then in next 2 weeks, 1 or 2 weeks, it is expected to recover up to the 539x, and then we are expecting the moving averages, not the moving averages of the daily chart. No, I'm talking about the moving averages of the weekly chart. Then the moving averages of the weekly chart will also come down, and then slowly next 2 or 3 weeks the S&P 500 will test the moving averages, okay, and then it will come down. Now one more thing, just be careful, because the market is bearish, heavy bearish sentiments. It might take 1 or 2 days before it can actually give or come under this the technical compulsion to give a bullish retrace. The indicators have started to saturate, have started to indicate that there will be a bullish reversal, but still 2 or 3 more indicators are there, okay, that should also confirm the same, and this can happen as early as on Monday. Okay, but on Monday at first it will have to come down. Okay, it must first come down, because see what can happen here is that if the S&P 500 gives a gap up open, okay, try to move up, doesn't come down, then what will happen? In that case, this the test to the moving averages, okay, or the bullish movement will be restricted, the bullish retrace will be restricted. In that case, it will open more room in the bearish side. In that case, what will happen? The technical indicators which are about to saturate will not saturate in next 5 to 7 days. This means more fall for 5 to 7 days will be allowed. Okay, that is why one or two red candles are good for the stock market, because then the stock market will come under a technical compulsion to get a heavy bullish retrace. But one or two green candles here immediately on Monday or Tuesday will simply, it will make the situation worse, because it will open more room in the bearish side wherein continuous fall for 5 to 7 days will be allowed. When I say the continuous fall, then to what levels this continuous fall will be allowed? Next, the 50% of the fib retracement level is around 4,830 or 20, somewhere around that. Okay, then that fall will be allowed to this, the 50% of the fib retracement level, before we can see any substantial or any significant bullish retrace. So now what we, other than this, so now what we know is that the correction is not there in the picture anymore, it is the recession. Okay, the year 2025 is the year of recession. Market is expected to, and market and the economy is expected to recover in 2026, and then there will be a good and the long term recovery. Okay, and then good bullish movement, heavy bullish movement will seen in the coming years. But for now, 2025, 2026, for around 1 year or 15 months, the recession will be there. But guys, recession is the best time to make money. Okay, you can make a lot of money, more than what you will be making during the bullish cycle. For this, you need to understand how the stock market works. So for this is my S&P 500 knowledge transfer program. This program will help you trade confidently and carefully in this the recession cycle. No matter how bad this the recession cycle will be, this S&P 500 knowledge transfer program will help you. And I can give you an assurity that when you participate in this the S&P 500 knowledge transfer program, okay, and you learn these the indicators, these the techniques, these the hacks, strategies, everything, then there is absolutely no doubt that during this the recession cycle, you will be the one who is going to make money while the others are going to lose. Whatever I've learned, okay, in these the last years, okay, the patterns and everything, whatever I know, I share that in this the S&P 500 knowledge transfer program. That is why I am so much confident, and that is why I am giving you an assurity here. So I'm going to teach everything from the basics to the advanced, how the stock market works, the technical indicators, all of the trading strategies. Other than that, how to recognize the manipulation, how to recognize the news, or where to get the credible information. Then I will teach you the options from basics to advanced, including the options strategies and the options premium calculator. Then I will tell you how to predict the price, how to know the limits. Then trend analysis, how to analyze the trend, how to understand the trend change. And then I will share with you these the hacks, okay, which works almost 100% of the time with almost 100% accuracy. And guys, this is my email address. Whenever you want to participate, you can send me the email. These are some basics, some important terms and conditions, and these are the snapshots of the meetings. So guys, I have given the link to this Google spreadsheet in the description of the video and also in the comment section. And guys, there is one more thing, that if you want to learn only the hacks and nothing else, okay, or only the options, then you can visit my Patreon page, and under the shop section you will find these programs. In this program you will learn only the hacks, okay, and here you will learn only the options. So I have given the link to my Patreon community in the description of the video and also in the comment section. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. So for now everything is bearish. The relief, okay, the earliest relief or the good relief that can come, okay, it will be Thursday. On Thursday, the inflation data, Okay, the CPI data, core CPI data will be released. Okay, and then on Friday the banks will post the earnings. Okay, now on Monday, Tuesday, Wednesday, these 3 days are expected to be volatile. So other than the technicals, nothing is going to support the market. Okay, only on Thursday there will be some data, inflation data. Then on Friday the earnings. Okay, that can help the market. Now in terms of the numbers, but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now in terms of the numbers, what we know is that 5,000 is the psychological mark. It is the psychological mark, 5,000. Okay, for now S&P 500 will try to not to breach. I'm not saying a closing below 5,000 or sustained movement below. I'm simply saying a breach. For now S&P 500 will try to not to breach 5,000. Okay, because breaching the 5,000 will then immediately open the 4xxx range. It is not specific to 4,800, 900 or 700. It is the entire 4,000 range. Okay, so what does this mean? This means that there was a very little gap, okay, back in May 2024, and the closing price was 5064. This means that S&P 500 is allowed to come down to 5064, okay, to fill the gap. But below, just below 5064, there is my calculated heavy support level. Okay, that is in the 504x, and then after that my calculated support level is in 501x. Okay, in this manner S&P 500 is going to get heavy support. Okay, first of all the gap will be filled. Okay, then the 504x is there, and then the 501x is there. Now the situation will not change, the situation will not deteriorate. Okay, as long as S&P 500 is holding above or at 501x. Okay, that is very heavy support level. Once the S&P 500 loses this support level 501x, then situation can drastically change, because after losing the 501x level, it will be coming very near to the 5,000. Okay, and if there comes a breach, let's say the breach is like 4,999.99. Okay, even a 1 cent breach can trigger heavy fall in the coming days. Okay, so that is why a fall, more fall is allowed, more fall can happen. There is no doubt about that. There is no problem as such, because the market is already bearish. Okay, this heavy fall, it was supposed to be there into the picture in 2024, but the market movers, they have delayed this the fall or this the correction. If they would have given a good correction in 2024, then there was no need for the recession in 2025. Okay, however they were greedy, they were pushing the market up and up higher, and then they have created the recession by themselves, which otherwise not there in the picture. Only the correction, or a little around, somewhere around this, the correction only is 25% fall or so. But now we are expecting 50% to 60% fall in the indices. Okay, because of that greed. And this is not just limited to one stock market. It is not just limited to the US stock market, but the same was seen everywhere. Okay, the Asian stock markets or the European. Yes, it was the European stock market that was moving, that was extremely heavily bullish as compared to the other market. Then there was the Indian market. Okay, and there were then one or two other markets, okay, that were extremely heavily, they were heavily bullish. Okay, they were not supposed to be that much of bullish. This is why these markets like European market and the Indian market. These are the two markets that are going to lose the most during the recession. Okay. Anyways, once again, guys, recession is not the time to fear. Recession is the time to make money. You just need to know how the things work. Where will be the bottom? Where will be the top? Sell on the peak, buy at the bottom. So as long as the 5,000 is not breached, okay, the market will remain recoverable. Recoverable to what? That is the question. For now, the market, any recovery in the market will be limited to 5133. Now, this 5133 is not my calculated support or resistance level, but 5133 is the 38.2% of the favorite retracement level. Once the S&P 500 sustains above 5133 or closes above 5133, then 519x is inevitable. Okay, 519x will be there. Okay, it might take 1 day or 2 days, but it will be there, 519x. Okay, closing above 519x opens the door to 539x, and in that manner this gap, at least this gap, will be filled. Okay, but between 519x and 539x there are two very important levels, and one of them is the 526x. Okay, now if I calculate from here, from the recent low, that was 506, what was that, 5070 or so. Okay, so it will be in the 526x. The retrace is somewhere around 3.5% to 526x. Okay, that is perfectly fine. Okay, after this heavy fall, this much of retrace, but this 3.5% may take at the entire week. Okay, so you need to understand it may take an entire week because the heavy selling is there in the market. Okay, so once 526x is there, then there will be very high probability that 539x will also come into the picture, okay, in next 1 or 2 weeks. Okay, this will be more confirmed on Thursday or Friday, because see, if on Thursday, if through the inflation, if the situation deteriorates, okay, in that case this gap will not be filled for now 539x. No. In that case, any bullish retrace or any bullish reversal will be limited to 519x, because in that case S&P 500 will be coming down and will enter into 4,000 range. Okay, and where the 50% of the fib retracement level is at 4820 or 30. Okay, that is the 50% of the fib retracement level. Then it will be heading to the 50% before we can see a meaningful bullish retrace. Now this is also true that if the S&P 500 loses, or if there comes a breach of 5,000, then there will be high probability, heavy probability then that there may come more fall in the market, although the technicals will saturate. Okay, then it will be defined by the technicals whether there will be an immediate bullish reversal or if it will take some time. Okay, because if the technicals takes time, more than 2 days to saturate, sorry, more than 1 day or 1 or 2 days to saturate, then more fall is allowed. Then in that case 4,900 is there. Okay, then the S&P 500 is allowed to come down further to around 3x 4,903x range. Okay, where it will meet my heavy support level, and then it will recover, it will retrace. Okay, but provided, see, this retrace will happen, or this retrace will be good provided that the technicals have saturated, because if the technicals do not saturate, then this retrace may take some time. Although S&P 500 will sustain here for 1 or 2 days, but still it will take some time, it will take some good time. Exactly to what levels the S&P 500 can come down, okay, that can be seen or predicted through Dow Jones. This is the Dow Jones. It was 38,315 closing. Okay, the next heavy support level is 37,600. This means that if the fall continues and the Dow Jones comes down, then it will be coming down to 37,600, and then at around 37,600 it will hold, it will sustain, and then it will be allowed to get a bullish reversal or a bullish retrace. Now when the Dow Jones will be around 37,600, so that will be a fall from the previous closing to 37,600, like 2% fall. 2% more fall can be seen. If 2% fall happens in the S&P 500, then this 2% will be around 4,900, 60, 70 somewhere. However, because S&P 500 gives up more than the Dow Jones, okay, so this, yes, this again brings in 4,900, 3x in the S&P 500. This means 493x in the S&P 500 and 37,600 in the Dow Jones. Okay. So now it makes sense that when these two indices comes down to these the levels, okay, and at the same time the technicals are saturated, then from here the market will get a reversal, a good reversal. The question is that under the normal circumstances or in the normal scenario, this reversal will be to what level? Okay, once again 5133. Okay, this is the 38.2% of the favorite retracement level. Okay, this much the reversal will be allowed. Gaining 5133 means 519x in the bull side, and gaining 519x means 526x in the bull side, and after 526x it is the 539x in the bull side. Okay, so although the numbers are clear, okay, but the most important question, when to go bullish? Okay, this answer will be known only when the market comes into the session and how it behaves at the levels. So the answer to this question, when this will happen. So if you are my Patreon community member, then you need not to worry about this, the question on when it will happen, because before it is expected to happen, I will tell you through these the daily updates. Now why this is very important? Because see, if there comes a gap up open, okay, it try to move up. Now everyone will be thinking that now the bullish retrace cycle has started. It may or may not. There is no 100% guarantee that it has started, because it is already under bearish pressure. Then what can happen? Intraday we will be seeing, okay, it is up, and then intraday there will be a sudden fall and it will come down. So what you were thinking or seeing as bullish retrace was actually the bearish, the bearish cycle. It was actually the continuation of the bearish cycle. For the bullish retrace to happen, some conditions must fulfill. These conditions includes the numbers, means the levels, zones, and also the technicals. Two must indicate collectively that now the bottom has seen, or the market has reached to the bottom, so that there will be 100% guarantee that now the bullish retrace will be there. There will be no more fall. Whatever fall will be there, it will recover, will move up, irrespective of anything, it will move up. So the fall will be very limited to 0.1%, 0.2%, very limited, 5-10 points only, and then it will remain bullish. That kind of guarantee is needed, okay, at this point, because otherwise this will be a trap. This will be a big trap. So see, if it retraces from here, okay, without the support of the technicals, without the support of the calculated levels or the zones, if it retraces from here, okay, it gives one or two green candles or maybe three normal green candles. Okay, now everyone is thinking it is bullish, but it is in a heavy bearish cycle in a manner that now it will be coming down to 4820 or 30. That is the 50% of the favorite retracement level. So this is not the time to go bullish. When you want to go bullish, then let the technical saturate. Let the S&P 500, Dow Jones, and the market to hit the absolute support levels. Okay, once that happens, in that case we can say that yes, now it will move up, it will not come down. So guys, I hope this is clear. And once again, recession is not the time to fear. It is time to make money. It is the time to trade with confidence. and you can gain that confidence through this S&P 500 knowledge transfer program. That is why I'm assuring you that once you participate in this program, S&P 500 knowledge transfer program, then in this the recession cycle, when the others will lose, you are the one who is going to make substantial returns. You just need to know how the stock market works, the technicals, all of the trading strategies, the hacks. And I've given the link to this, the S&P 500 knowledge transfer program Google spreadsheet in the description of the video and also in the comment section. And guys, if you want to get these daily precise updates of the S&P 500 and the Dow Jones and in a manner to the entire market every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, and the stock market opportunities and the midweek update video, then I've given the link to my Patreon community in the description of the video and also in the comment section. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon.